Welcome to episode 25 of the 5-Minute Investor Podcast, where Stockhouse columnists Jon Brown and me, Trevor Abes, each deliver a 2.5-minute stock profile related to recent news stories with investment implications. This week, we're talking about stocks that score highly in terms of ESG, or environmental, social, and governance metrics, setting sustainable long-term examples for companies across industries to represent themselves in the marketplace. Jon, where do you think an investor should direct their due diligence if they want to inject a values-based approach into their portfolio?
Trevor, this week, instead of one stock, I'm going to tell you about a basket of profiles found within an exchange-traded fund, or ETF. It's Wealthsimple's North America Socially Responsible Index ETF. Its symbol is WSRI on the TSX. WSRI invests in public equity markets in Canada and the United States, targeting companies that are considered socially responsible in their business dealings and directly promote environmental responsibility. It does not invest in stocks of companies operating across fossil fuels, gambling, tobacco, weapons, or alcohol sectors. The current dividend yield for WSRI is just under 1%. Its top 5 holdings include some notable names: Hydro One, Vulcan Materials Company, Wheaton Precious Metals, Agnico Eagle Mines, and West Fraser Timber Company Limited. I feel obliged to point out that some of the responsibility can be subjective. For instance, Wealthsimple says they avoid companies involved in human rights controversies. This includes defense contractors and weapons manufacturers. However, some companies found in the ETF with international operations may offer their products in regions under dispute. Though it can be argued if simply selling your product or doing business in a region under dispute is enough to be considered worthy of a boycott, you'll have to do your own due diligence on that one and see if a company fully aligns with your beliefs. As far as performance goes, WSRI has risen around 12% or $5 Canadian since the year began. And there's an apparent trend in ESG. According to Milani's 2024 ESG disclosure study, published in October, 73% of the TSX constituents have published their ESG or sustainability reports, up from 71% in 2023. The TSX has a data hub online where you can find out more about specific sectors, and some of the data might surprise you, especially where tech and energy are concerned. Trevor, you have more on a specific stock in this regard, right?
Yeah, Jon. My ESG stock for our quarter-century episode is Anaergia, ticker ANRG on the TSX, a renewable natural gas technology company holding more than 250 patents on the conversion of organic waste into sustainable solutions, such as RNG, fertilizer, and water. The company has delivered hundreds of projects over the past decade and ushered more than 1,500 resource recovery plants into operation since inception more than 30 years ago, gradually establishing itself as one of the top waste-to-energy companies in the world. It has achieved this by reducing greenhouse gas emissions and producing carbon-negative fuel through an end-to-end solution suite spanning solid waste processing, wastewater treatment, organics recovery, anaerobic digestion, as well as biomethane production. Following a leadership refresh in June 2024, including a renewed focus on capital-efficient growth, the company has posted solid financials indicative of early success, achieving 36.7% revenue growth year over year, supported by 152.7% growth in gross profitability, lower trending debt and operating expenses, and backlog growth from $104 million in Q4 2024 to $243 million in Q2 2025. That's Canadian dollars. Supported by long-term capital from Marnie Investissement, its majority shareholder, Anaergia has gone on to add $227.8 million in new contracts since Q2, including a $184 million contract on August 19th, its largest to date, making the company one to watch should new leadership continue to demonstrate growth in line with profitability. Investors, for the moment, like what they're seeing, lifting Anaergia stock by 29.71% since the record-setting contract, and by 258% year over year, with shares last trading at $1.79. As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. Thanks for listening, and we'll see you on Monday. This podcast has been prepared as part of a partnership with Wealthsimple and Anaergia Inc. and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.